So just got done with a excruciating workout this Monday morning, and we got a lot to talk about today. A lot of bad news, unfortunately. More bank crisis. We're going to see big problems coming. You saw a bail-in over at Credit Suisse where the bondholders just got the middle finger. You're going to see more bail-ins coming across the globe, even here in America. Again, a lot to talk about. Wanted to get a good start to the week. Got a good workout in here. We were here for an hour and a half, just working on defense, working on offense, getting a good sweat going, getting the body in shape, the mind in shape. And everybody out there needs to be productive. You need to be working hard. You need to be using your mind. You got to be working your body, challenging everything, mind, body, spirit, and making sure that we're protecting our money and our finances. But this is the way we start out the week. Stay tuned. Without further ado, let's get started. It's Monday, March 20th, 2023. I'm going to get right into it. Before I do, please make sure to like this video, share all my videos all over social media, share them with all your friends, all your family, and make sure you subscribe to this channel and that you hit that bell notification so that you are alerted when the newest videos drop. But without further ado, let's start with this first article today coming from the New York Times. Fate of First Republic, uncertain as shares plummet again. I just checked, this is actually getting into late afternoon, but I just checked the shares of First Republic, down 47% today. We saw a suckers rally take place. Dow Jones was up 382, NASDAQ up 45, nothing more, nothing less than a suckers rally. First Republic Bank shares down 47%. Investors know that things are not fixed, things are not over. The question we have to be asking ourselves now is who's next? What bank is going to fail next? Gold up 930 as I make this video, silver up 20 cents. CNBC, that $17 billion wipeout of Credit Suisse bondholders has not gone down well in Europe. This, in my opinion, is a complete bail-in. They stole the bondholders' money. Credit Suisse has now been taken over by UBS for the price of $3.2 billion. They have $1.29 trillion of assets. Now, look, I'm not an economist. I'm not brokering this deal, but wouldn't it make some type of sense, common sense, that maybe they would sell off some assets that the shareholders would have a lot more input and more to say here, but no, instead they were just taken over while the bondholders get absolutely nothing. Complete bail-in. Makes you really wonder what is going on, what is taking place behind the scenes. Here's another one from CNBC. The Federal Reserve is still expected to go through with a rate hike. What this means for you. It's very simple what this means for you. You're going to pay more to borrow money. You're going to pay more to service debt. Average credit card rates right now, as I make this video, are now topping 20%. A year ago, 16.34%. A year ago, now topping 20%. And a year ago, at 16.34%, we thought that was absolutely outrageous. Now, they're topping 20%. And people are using credit cards to pay for the essentials that continue to go up every day, and they're being charged more to use those credit cards. Mortgage rates now, today, 6.66% for a 30-year. Average 5-year car loan is 6.5%. A year ago, it was 4%. And remember, the price of those cars over the year has gone up. Student loan debt sitting at 4.99%. Again, get ready to pay more to borrow money, more to service debt. Here's another one from CNBC. What happens during a credit crunch? Well, again, get ready to pay more to borrow money. And it's going to be much tougher now to borrow money. You want to go out and buy a house, you want to buy a car, it's going to be much tougher to get that loan. Lending restrictions are going to tighten. So we are going to see, I believe, a liquidity crisis taking place, a credit crunch. It's going to be much harder for households to buy those cars, to buy those homes, even to pay for repairs and upkeep of the cars and of the homes, because more than likely and most likely people have to borrow money to do this, and it's going to cost more. It's going to be more difficult for businesses to hire. It's going to be more difficult for businesses to open new stores because they need to borrow money in order to do this. It says in the article, credit is the mother's milk of economic activity, and that is 100% true. Think about now when you go to buy a home. They may say, hey, 20%, 30% to get it done. If you don't have perfect credit, you're going to have to put down some serious money. This is going to make it much more difficult to buy a property, to buy a home now, as prices are coming down a bit. The credit restrictions are going to tighten. They're more likely going to ask more down payment. And we know that the savings rate in America is 2.4%. So, if your bank says, hey, fine, we're going to give you a loan at 6.5%, 7%, whatever it might be, but you're going to have to put down 20, 30%. How many people are going to be able to do this? More news today. Amazon to lay off 9,000 more additional workers. How does this affect the economy? Well, it means that a lot of these people are not going to be able to make their rent, their mortgages, or their car loans. And we're going to see more and more layoffs, ladies and gentlemen. We've been talking about this for a while, and now it is here. And get ready. It's going to be time to pay the piper. People did not think that this was ever going to happen. And unfortunately, most people did not prepare for what is happening. Disney managers told to identify layoff candidates with 4,000 job cuts expected by April. This on Fox Business yesterday. I cannot stress this enough. Make sure that you have a cash reserve. Make sure you're doing everything to pay off your debt. Make sure you're doing everything to improve your credit. I think we're going to see a time where people are going to get very desperate for a job. They're going to wish that they had a job. We're going to see a full 180 here, ladies and gentlemen, where people didn't want to work. People thought that they would just rely on all the free money, the stimulus checks, and unemployment, and all the government subsidies. Well, when they realize that the government isn't coming to save them, that this stuff's all drying up, that the free money, the gravy train is over, they're going to wish and beg for a job, and it may be too late. We're going to see more inventory in the housing market because so many people are going to be losing jobs here this year and next year. And as Rob Kiyosaki said, it's not about inventory, it's about jobs. That's what makes the real estate market go round. It's not about inventory, it's about jobs. If you don't have a job, it doesn't matter what the price of the home is. You're not going to qualify for the loan. You don't have the money. You don't have an income. So you don't even have to worry about buying a house. And we're going to see more inventory coming. We're seeing a lot more inventory every day. I cannot tell you, looking in the South at ranches daily, I'm getting price reductions. I'm seeing more and more listings. I'm being sent listings every day now. Still, in my opinion, way overpriced. We're going to see what this looks like 90 days from now and 6 months from now. This is all changing so quickly. But when people are losing jobs, when you have inflation, when you have the Fed raising rates, this is going to be absolute dire straits for the real estate market. And there's going to be huge consequences here for people who just did not prepare. The economiccollapse.com, the big banks have bailed out First Republic. Well, they tried. This is a couple days ago. They tried, but it's not working. But who is going to bail out the big banks? That is the question. Can you imagine if a big bank goes down? And it is very, very possible. Nobody is immune from what is coming. Nobody watching this video is immune from losing a job. There's no bank out there immune from going down, big, medium, or small. They are sitting on hundreds of billions of dollars of unrealized losses, just like the First Republic Bank. They also have trillions of dollars worth of exposures to derivatives. This huge derivative bubble we've been hearing about for years. So who's going to bail out these big banks? Again, with billions of dollars of unrealized losses. All the big banks have taken huge losses in the past week, and they're sitting on trillions of dollars worth of exposure to the derivative market. No doubt, just talking to everyday people, people are losing faith in the banks, and that is a big problem, because when people lose faith in the banks, the system cannot function. And people just got another wake-up call today with First Republic going down another 47%. And people are still getting money out of the bank. They're holding cash. They're running to gold. They're running to treasuries. And there's just a lot of uncertainty out there. And isn't it shocking to see the markets up today with bank runs, bail-ins, bank collapses, and yet the market is up today. Shocking, isn't it? But people will tell you and I that there's no manipulation, that it's all real. These people live in fantasy land. They live in a bubble. Less money in the banks means tighter financial conditions. And we saw a lot of money come out of the banks. Yes, there were inflows to bigger banks, but this is going to be huge trouble for regional banks. And these regional banks are sitting on a boatload of commercial real estate. The hedge, the growing auto loan problem facing young Americans. Well, I think it's facing everybody. It says here, growth in outstanding auto loans from 2020 to 2022. We go by ages, this is growth over 2 years from 2020 to 2022. 18 to 29 years old, we saw 31% growth in outstanding auto loans. 30 to 39, 29%. 40 to 49 years old, 23%. 50 to 59, 14%. 60 to 69 ages, up 11%, and 70 plus, 11%. Over 30% of new cars are being sold over MSRP. People are paying way more than these cars are worth. And if you buy a house today, you are paying way more than it is worth. Also, it may have come down in price. It's still completely overpriced. The Fed reports average auto loan is now $24,000. That's up 41% from 2019 when it was $17,000. In 2022, Gen Z and millennials saw $20 billion in auto debt fall 90 days plus delinquent. How many billions of dollars? And I want to wrap this video up on this, because we talk so much about the real estate market and the bank's on the hook for all this commercial real estate and all these homes, and people buying these homes for way more than they're worth. But we don't talk a lot about the auto loans that these banks made. And a year ago, they were making auto loans loan to value 140%. And we all know how fast autos depreciate. And the billions of dollars that credit unions and banks made on these auto loans, where people are now going delinquent, cars are being repoed, they're not worth anything close to what people paid for them a couple years ago. And at some point, we're going to see the auto market just drop, the bottom fall out, because people just can't afford to buy these cars. And we're seeing more inventory of new cars. We're going to see more inventory of used cars as people are losing their jobs, the repo man taking these cars, and the inventory is going to pile up, and you're just not going to have the buyers. And these banks made ridiculous loans, reckless, dangerous loans for these automobiles, and they're going to pay a severe price here. But nobody's talking about it. We're talking about commercial real estate, we're talking about the housing market, but we're not talking about the billions upon billions upon billions of dollars in reckless auto loans that these banks made, and credit unions. Everybody goes, well, run to the credit unions, they're safe, they're safe. They made a lot of bad auto loans, and they're going to have a day of reckoning too, ladies and gentlemen. Nothing is safe. You put your money in a bank, a credit union, there is counterparty risk, versus you put it somewhere where you know it's safe, where you can protect it, and you can disperse it in multiple locations. That's much safer than keeping it in a bank, ladies and gentlemen, in my opinion. Now, yes, there are people, like, you have a business, you're buying a property, I understand you have to have money in the bank. But if you don't have to have it in a bank right now, I would have a majority of it out of the banking system. I'm going to leave it there today. The animals are getting upset. But a lot happening. I was really tied up today with a lot of stuff. I wish I could have followed up a little bit more with what's happening, but we'll see how the week plays out. Is it going to be 25 or 50 basis points on Wednesday? I believe it's going to be 25. Let me know your thoughts. Comment down below. God bless every one of you. Thanks for watching. Stay safe out there. Make sure you're protecting your wealth and make sure that you're protecting yourself, your family. Everybody talks about, that this is just a financial collapse. No, this is a social collapse, and we're going to see a real social fallout here. And what I mean by that is you're going to see a lot of crime, you're going to see a lot of chaos, you're going to see a lot of violence, and that's just the way it is. That's just a fact. That's what comes with economic collapse. So I hope you're preparing for that. Also, that to me is about the most important thing you can do next to walking close to God. But I'm going to get out of here. Have a great day. God bless every one of you.